Good morning. Here is today's Korean economic news briefing. We begin with an urgent response from the government to quell anxieties in the foreign exchange market. Deputy Prime Minister and Minister of Economy and Finance, Ji Yoon Chol, announced today that the government will take strict legal action against those who first disseminated and actively participated in spreading fake news, alleging a mandatory government sale of US dollars. This decisive move comes amidst heightened volatility in global financial markets, exacerbated by ongoing risks in the Middle East. The minister stated that such baseless rumors, especially during times of crisis, can severely disrupt market stability and will be met with severe consequences, including charges under the Telecommunications Basic Act. The swift action underscores the government's commitment to maintaining financial market order and preventing the propagation of disinformation that could trigger panic among investors and the general public. In related and unfortunately unsettling news from the financial markets, South Korea's benchmark Kospi index plummeted by 4.5% yesterday, while the KOSDAQ also saw a sharp decline. The $1 exchange rate surged by 18 won and 40 jeon, closing at 1,519 won and 70 jeon per dollar. This significant market downturn was primarily triggered by unexpectedly hawkish remarks from U.S. President Donald Trump regarding the Middle East conflict, specifically addressing Iran. What began with expectations of de-escalation quickly shifted to concerns of intensified aggression, sending shockwaves through global markets. Both the Kospi and KOSDAQ markets experienced the activation of sell-side sidecars, which temporarily halt programs selling orders to cool down rapid market declines. For the KOSDAQ, the sidecar was triggered when the KOSDAQ 150 futures price dropped over 6% and the spot index fell over 3%. Shortly thereafter, the Kospi also saw its sidecar activated as the Kospi 200 futures index fell more than 5% from the previous day's close. This marks the first time since March 23 that a sell-side sidecar has been activated in the Kospi market, highlighting the gravity of investor sentiment in response to geopolitical uncertainties. Moving to macroeconomic indicators, the Consumer Price Index in March rose by 2.2% year-on-year, marking the steepest increase in 3 months. This inflationary pressure is largely attributed to the Middle East shock, which led to a significant surge in oil prices, particularly diesel, which saw a 17% jump. The blockade of the Hormuz Strait has contributed to the highest increase in petroleum product prices in 3 years and 5 months. Experts warn that airfares and other related costs are likely to see further increases in April, posing ongoing challenges to household budgets and overall economic stability. This inflationary trend, coupled with the depreciating won, presents a complex challenge for monetary policy authorities. Amidst this volatility, there is a silver lining in the bond market. South Korea is seeing a substantial inflow of Japanese capital, with foreign investors net purchasing approximately 4 trillion won worth of government bonds over the past 3 days. This positive trend is largely attributed to the anticipated WGBI effect, referring to the potential inclusion of Korean government bonds in the World Government Bond Index. Such inclusion would significantly boost demand for Korean debt from global institutional investors, leading to enhanced liquidity and potentially strengthening the won. Deputy Prime Minister Ji Yoon Chol was recently seen chairing a market situation review meeting, where discussions likely included strategies to maximize the benefits of this capital inflow and ensure market stability. On the fiscal front, debates continue over the government's budgetary approach. The opposition power of the People Party has criticized the president's policy speech as a sweet anesthetic, warning of a potential tax nuclear bomb after the upcoming elections. A former Vice Minister of Economy and Finance from the opposition camp expressed concerns that while the supplementary budget might appear debt-free, anticipated growth slowdown in the second half could lead to tax revenue shortfalls. Spending all current excess revenue on cash handouts could, according to the critique, precipitate a major economic crisis in the latter half of the year. This highlights the ongoing political tensions surrounding fiscal policy and the government's approach to economic management. Separately, the government is reportedly planning a 5 trillion won emergency budget to compensate oil refiners for losses incurred due to the Middle East situation and potential price caps. However, the National Assembly Budget Office has urged the government to establish clear and specific criteria for calculating and managing such a substantial financial intervention. Shifting focus to the industrial landscape, Hyundai Motor is embarking on a massive redevelopment of its Ulsan plant, the world's largest single automobile factory. This multi-trillion won investment aims to expand its electric vehicle production lines, transforming the historic site where the company's first car, the Cortina, was assembled in 1968, into a state-of-the-art EV manufacturing hub. This move signals a strong commitment to future mobility and positions Korea at the forefront of the global EV transition. Similarly, Taekwang Industrial is actively pursuing a new business drive, expanding its operations into B2C, biotech, shipbuilding, and real estate, aiming for a structural transformation centered on new growth engines. Meanwhile, Minister Kim Jung-kwon of the Ministry of Economy and Finance is preparing measures to prohibit the hoarding of petrochemical raw materials used in packaging and plastics, addressing potential supply chain disruptions or price manipulation in key industrial sectors. In the real estate market, new regulations restricting mortgage extensions for multi-homeowners and rental business operators in the Seoul metropolitan area and designated regulated zones are stirring concerns. Industry experts warn that these measures could lead to a reduction in *Jaeons, lump sum deposit rental, listings and an increase in overall housing costs for tenants. While exceptions apply until the end of existing lease contracts for residents, the long-term impact on the rental market supply remains a key concern. In brighter news for housing supply, Seoul City has approved plans for a 45-story, 657-unit apartment complex near Daerum Station, which will include 247 long-term *Jaeons* units, aiming to enhance housing stability. Separately, the Seoul Housing and Communities Corporation announced the successful applicants for the land lease apartments in the Magok 17 complex. Meanwhile, the ruling People Power Party has put forward half-price *Jaeons* as its primary real estate pledge for the upcoming local elections, proposing measures like interest exemptions and principal reductions based on the number of children, and expanded tax credits for monthly rent, aiming to alleviate housing burdens for the public. Finally, in the realm of AI and technological innovation, Korea is making significant strides. LG Group Chairman Koo Kwang-mo is reportedly visiting the US and Brazil to explore AI infrastructure and emerging market opportunities, focusing on high-value integrated solutions beyond battery hardware. Domestically, AI semiconductor startup Furiosa AI unveiled its Renegade chip, boasting 7.4 times better power efficiency than NVIDIA's GPUs for inference tasks, a crucial factor for sustainable AI data center design. This signifies a major step towards reducing the massive power consumption of AI infrastructure. POSCO DX is also leveraging domestic innovation, announcing a partnership with AI semiconductor startup Mobilant to utilize Korean-made neural processing units, NPUs, instead of foreign GPUs, aiming to cut costs and boost performance in its intelligent factory initiatives. Furthermore, the Federation of Korean Industries and the National Data Agency signed an MOU to collaborate on advancing economic statistics and AI data utilization, fostering a data-driven approach to economic policy. For investors and general viewers, the economic landscape remains highly sensitive to geopolitical developments, particularly the ongoing Middle East situation. The significant market volatility and inflationary pressures, especially in energy prices, underscore the need for cautious investment strategies. While government interventions aim to stabilize markets and curb the spread of misinformation, the interconnectedness of global events means continued vigilance is essential. On a positive note, the country is seeing promising developments in its bond market, potentially benefiting from global index inclusion, and key industries like automotive and technology are actively investing in future growth areas such as EVs and AI. As always, staying informed about both domestic policy responses and international events will be crucial for navigating these dynamic times. That concludes today's economic news briefing. Thank you for listening.